Welcome back to the second half of the Futures Show. We're less than 60 minutes away from the cash open for stocks on Wall Street. Ladies and gentlemen, this morning, Alan Nuckman, the Chief Market Strategist at Agora Financial, is joining us to, well, take a look at some of the recent price activity we've been seeing in the dollar and rates. Alan, there's been a lot of attention directed towards, the TNX nearing that 1% level, but also the indices steadily into new all-time highs. I'd imagine the bid in equities is probably more notable for you and should be addressed first.
Well, yeah, that's the big elephant. That's what's driving everybody is the positivity, and these markets tend to move together. But this is full steam ahead. I mean, yesterday's probably one of the first days I think we've seen in a while where we've had all four indexes make new all-time forever highs at one time. So it's everybody. It's all assets. It's full steam ahead. And everything's moving in a positive direction. And I think a lot of this is we've been talking about this dollar dive is really contributing, but these trends are intact. We've got the stocks moving up, the equities moving up. We've got the energies now making a big comeback. We talked about that a couple weeks ago. That was the biggest news that I saw in the last couple of months, the fact that the energies had bottomed and broke out. And now you're seeing crude above the midpoint for the year. And that's a very positive sign because those stocks in that sector have been so sluggish, and that's contributing now to the macro market continuing to move upward.
All right, can we chalk up some of the dollar weakness to this? Some of the, we've got rates at historical levels still and stimulus measures. I mean, are we talking a D, all of the above kind of scenario? I mean, we could add a few more potential fundamentals behind what we're seeing as far as this recent bid in crude.
Right, and I could add E to your list. E is I don't care. It's the dollar is down. It's broken down. We saw so many signs that this was on the way. The first was, the euro currency would break out above 120. Now, that doesn't mean there's still not a lot of opportunity. If we're going to go through the currencies today, which I want to, it's important. Obviously the dollar index is lower. We're seeing rates stall. We're between 0.5% and 1% in the 10-year yield. So not much happening there. And if you look at bonds and 10-year notes, they're just kind of stuck. And not very tradable like they were when we were kids. But we'll see how that changes. The one thing I want to mention about the macro market before we get into the currencies too deeply is this has happened without Apple. Apple is still 10% off its highs. A breakout above 125.5 in Apple can send it breaking out to the upside. A nice technical wedge there. So I look at that as a very as a very positive sign that there's still more. If you look at the NDX had a 2,000 point drop. So if you add that on the old top, we're looking at 1450 as the technical target, 14,500, technical target, which is about 15% above in tech. So this last rally in the market's really not been driven by the big tech stocks. So I'm looking at that as the next leg that's going to give everybody a push.
All right. You mentioned you wanted to talk currencies. We've been kind of sprinkling the show this morning today with a bit of a currency discussion because I've mentioned at the top of the show, we've got the Bank of Canada. Last time they changed rates, it was back on March of 26, 2020. I think they lowered by 50 basis points, but expectations are we're not going to see any change there through 2023. We've got the ECB. You were just talking about the euro currency and the bid we've been seeing there. Next week, FOMC, Bank of Japan, Bank of England. What are you dialed in on here in terms of some of these currency markets?
As far as trades go, 120 was so significant when we looked at the euro currency.
For the euro,
now,
okay.
So that was a ceiling that we could not get through. Now we're through that. We'll see how that acts as support on a weekly basis. 130 is the midpoint if you look at the last 20 years. So there's still a lot more upside in the euro currency. Now, if you're looking at something that hasn't moved yet, not to say that it's going to, but there's the opportunity. I'm looking at the Australian dollar. The Australian dollar has been between 70 and 75. That target's 80 on a breakout. Now, the Aussie and the Canadian tend to move very much in tandem. The Canadian's already broken out. The Canadian was between 75 and 77. In a range here, it is broken out. So we target 79 in the near term. But there's still a lot more upside in the Canadian as well. Canada is energy. Canada is crude. And if you look at the last, I don't know how many years, the last 15 years or so, the Canadian's been between 110 and 70, so that target's 90 as the midpoint. So we still have a lot of upside potential in Canadian, but I think the Australian is the opportunity for now. I think as the China concerns, the things that have been holding back Australia will be alleviated. I think from a risk-reward standpoint, that one has some potential on the upside here. And again, it's a commodity currency, and you're seeing how the commodities have had a comeback. Copper, even gold rallied $50 last week. And, I don't think it's over there. Yes, it broke below that the edge of that sideways trade that we had for about, 4 or 6 months. But it's come back, and we're not that far away from 1900 in gold once again.
Alan, when you're talking about those currencies, you actually really kind of reassured me in terms of where my focus has been and that it has been some of the correct markets here. I want to just pull up a couple charts here in terms of what Alan was talking about, because we don't oftentimes look at these individual currencies. We mostly just focus on the dollar. But Alan was just talking about the Australian dollar. We've seen strength there, as he mentioned. If you guys remember, those of you who watch the show on a regular basis, up and through this 7,300 level is one of the areas that I talked about watching the 6A as it strengthened. Up and through 74, we were talking about it. Also, Alan, you didn't mention, but the New Zealand dollar has been very strong as well. This has been one of the currencies we mentioned up and through 70 even. It got all the way up to 71.05 recently. We've been watching strength there. The 6S, the Swiss franc, also rallying recently. And ultimately, I wanted to get your thoughts on the British pound. Here you can see a lot of focus on Brexit. We mentioned that at the top of the show as well as one of our top stories. It seems like they're coming to a deadline here. We keep hearing of progress, but wash, rinse, repeat. I mean, no real definitive news yet.
Yeah, nothing's changed. Look at all those charts. They all look the same. It's about finding the best risk reward and levels to lean on. And until something changes, you've got the dollar down and all these up. So it's just a matter of what sort of velocity they're moving up with and what sort of volatility when they back off. What are you looking to be able to ride through the ups and downs? So that's why I'm an options player, so I can look to play big, longer term. As far as the pound goes, it obviously tracks the euro, but the euro is usually the leader and the driver. And when you go through the other ones, if you talk about the Australian dollar, yes, the Kiwi and the Aussie tend to move, very similarly in nation, but I think the Aussie is the driver. So, I'm looking to find out who's driving the bus and evaluate those as far as the opportunities go. But I still see the dollar down. Now, that's not to say we're not going to get some short squeezes here in this dollar. So let's be cautious about that. It took a lot of patience to see this latest leg down below and make new lows when for the longest time the dollar should have made new lows and couldn't make new lows. But that's why you have to follow the price. It's not about being right. It's not about having the reasons that it's doing what it's doing. It's about, taking advantage of it as it happens. And, these new dollar lows are a good sign. But let's see if you can get if there's going to be any bounce, which would be another opportunity to not necessarily be selling the dollar, but be buying some of these other currencies.
Price is king, Alan, as you mentioned, and the dollar, as far as the shorts, they did need to be patient as we were chopping around that 93, 94 area. Basically, throughout all of August into, this most recent breach we saw into the middle of November. I wanted to get your thoughts on how closely you're going to be watching this afternoon's 10-year note auction, Alan. It's a big one, and what have you been seeing in terms of demand for U.S. debt as we head into the end of the year?
Yeah, that's a market that's kind of fallen off the table. Like I mentioned, when we were kids, the bond room in Chicago was the biggest deal, and you'd get $1,000.
I haven't traded bonds since before I had kids. Talking 25 years.
So now these markets, they're a good indicator, but as far as a tradable vehicle, I mean, it's you want to see a markets that move. There's a combination there of volatility is opportunity. And you're not seeing any volatility. If you look at the 10-year notes, been trading between 137, 138, weeks. And, that used to not even be a day in the 30 years. So, It is what it is until rates get back to, short-term rates get back to 4% or so. I just don't see, anything changing as far as the choice for stocks or fixed, fixed income. There just is no choice. Money is going to go into the stock market until things change, and it doesn't look like things are going to change anytime soon. 2 or 3 years. So there's still a lot more upside in the stock market, and just looking at this stuff technically, it's buy the dips, sell the rips when it comes to stocks, and treasuries will come back someday. How long did you say it was? It's been,
25 years, 25 years.
I've been doing this 30 years now, Ben. So yeah, so it's been a long time. It's been a long time.
Alan, really appreciate you joining us here. I've been talking a lot about the activity and rates being noise as long as we hold up above the March lows, below the March highs, and it sounds like you kind of share in that sentiment. Certainly, right. We'll keep an eye on it if they do get up above TNX, but right now, well, I guess what you just mentioned kind of feeds into the old saying that the trend is your friend, basically, and it still seems to be. Alan, really appreciate you joining us here. Alan
It's
Nuckman.
above 1. It's not a big, even if the TNX gets above 1, that's not a big deal. I remember when it was only 2-3 years ago, I think, that the markets lost their mind because the yields got up to 3%. And that was, short-lived, obviously.
Big time. Again, feeding into that narrative, the trend that we've been seeing to the upside in terms of these indices continues to reward those who have participated in it. Alan Nuckman, the Chief Market Strategist at Agora Financial. Thanks for joining us here on Wednesday morning. Ladies and gentlemen, now that we've covered the fundamentals, Alan was just talking rate